Taking stock of your money. All asset values have been clobbered, and treasuries, they barely keep pace with inflation. Is it time to look at alternative investments? We're going to talk to one expert whose book is about the good, the flawed, the bad, and the ugly of alternative investments. And then Sprint Nextel, the customers just keep hanging up on the wireless carrier. Can they combat increased competition from the iPhone and AT&T? And then we're going to turn up the volume on Dolby Labs. The shares of the developer of sound system technology soared more than 10% today. We're going to talk to an analyst who says there is still more upside in the stock. Hello and welcome to Taking Stock. I'm Pim Fox. We're going to bring you more on those stories in just a few moments. But first, stocks did stage a rally in the last few minutes of trading. For more, and let's get those details, we're going to Michelle Steele. Michelle?
Hey, Pam. You know, U.S. stocks breaking a couple of days of losses here, closing out the day higher, about 250 points higher on the Dow, on speculation that the Fed will take further action to help combat the highest jobless rate since 1994. Let's take a look at those numbers for the week. The Dow down, though, despite today's rally, 4.1%. The S&P down about 4%, as well as the NASDAQ. You know, all this amid President-elect Obama's press conference on his economic plans, and he couldn't have chosen a better day or a worse one, depending on your point of view, to discuss economic concerns. Payrolls dropping by 240,000 for the month of October, spurring the leader of a National Bureau of Economic Research panel to say there is now no doubt that a recession is underway. Add to that troubles at GM and Ford. GM saying it may not have enough cash to finish the year, using nearly $7 billion in cash last quarter alone. That pushed it to the minimum level, pushing it closer to the minimum level it says it's needed just to pay the bills. GM, along with other automakers, have been making a direct appeal to the government for help here. In the meantime, GM suspending merger discussions with Chrysler. Chrysler saying it will carry on with efforts to team up with other automakers. And Ford burned through over $7 billion in cash in the third quarter. Ford's debt grade is now 7 grades below investment quality. Automakers have been hit, of course, by the credit crunch and higher gas prices throughout the summer. Speaking of which, interesting move here for oil today. Oil climbing as much as 3.4%, making up some ground after losing 13% over the last 2 days. It did pair those gains to settle almost 0.5% higher. Still, oil companies climbed onto that bullish wagon. ExxonMobil, Chevron, ConocoPhillips, all close to 5% higher on the day. Elsewhere, I want to mention Sprint quickly. If Sprint is your carrier, you're one of a dwindling group of people. The carrier lost over 1 million contract subscribers in the last quarter alone. And the stock fell as much as 15% after posting third-quarter earnings that trailed analyst estimates. Berkshire Hathaway, we are expecting those earnings out at some point, maybe in the next hour. Pam, you'll have the details on that, of course, at some point, but I'm going to throw it back to you anyway.
Thank you very much, Michelle Steele. Now, when stocks, bonds, commodities, when they all lose value, investors turn to the relative safety of treasuries. But, well, should they instead turn to some alternative investments? Larry Swedroe, he has some ideas. He's the director of research for Buckingham Asset Management. He is also the author of the new book, The Only Guide to Alternative Investments You'll Ever Need. Larry, let me first welcome you to the program. Good to see you. You know, the subtitle, I have to admit, the subtitle of the book is in a way even more intriguing. I mean, the good, the flawed, the bad, and the ugly. You list about 20 different types of alternative investments in the book. Can you just step back and tell us, are all alternative investments really for everyone, or are they mostly for the professionals?
Well, it's sort of the opposite. I would say there are very few alternative investments that are for everybody, probably about 3. And the vast majority are really for nobody, not including the professionals. They shouldn't be touching this stuff. There are very few people who have been successful with alternative investments. And the academic research shows, for example, that hedge funds, this glorified investment, and everyone wants to be the member of that exclusive club, have had a very hard time. Once you adjust for all the biases in the data and the risks, their returns have had a hard time keeping up with the risk-adjusted returns of Treasury bills, let alone providing these great returns that you hear about.
So tell me, what prompts all of this desire to explore in depth? I mean, so then why write the book, really? If most alternative investments really are something you should stay away from, What is the goal in learning more about them?
Well, number one is there are 6 that should be looked at, and 3 should probably be included in everybody's portfolio. And the most important is TIPS, but
The Treasury inflation-protected securities?
Exactly, and they're screaming buys, in my opinion, now, and I've been pounding on the table to tell people to be,
Why are
order.
they screaming buys if we don't have any huge inflation pressure?
Well, we don't know that there is no inflation pressure down the road, but long-term historical evidence is that short-term fixed income investments are the highest quality, which is the only kind I recommend, have provided a real return of about 1% or so. You go out to about 5 years to 20 years, you get a little over 2%. Today you can lock in up close to 3%. Last week you could have gotten 3.3 and have no inflation risk whatsoever. And of course they provide the safety of treasuries. But a main reason for writing this book was to help people avoid the mistakes of investing in what I would call mostly a bunch of garbage product created by Wall Street that only makes them rich, the purveyors and the marketers of the stuff. So it's really to help people avoid making terrible mistakes and avoid losing a great part of their fortunes.
One of the areas in the book that you do go into is the fixed annuity market. Explain a little bit about how that works and why that, at least along with TIPS, is one of the areas you say people ought to explore.
Yeah, TIPS and fixed annuities are 2 products that I think everyone should explore, although fixed annuities are really only right for people well into their retirements. They're best owned or purchased when you're about in your early to mid-70s. And the big advantage of fixed annuities is they provide an advantage that no other product can provide. It's something called the mortality credit, which allows you to earn a much higher rate of return without taking any risk at all. And it works like this. If you have 10 75-year-old people and they invest, say, $1,000 in a 5% CDs, at the end of the year, everyone would get, their $1,005, $1,050 back, and everyone would get that 5% return. But if instead, let's assume that we would expect one person to die at the end of that year, and they all agreed only the remaining people alive would share the pool, the return jumps up to an expected return of 17%. Now, the insurance companies, they know what the odds are, likelihood of living, so that they create actuarial tables. And so they might say, well, we'll keep 2% of that money to cover our costs of distributing the product and a profit. So you get that mortality credit, that extra return, that's unobtainable anywhere else, and there's no risk.
All right, and as we know, taxes and death seemingly inevitable. Thank you very much, Larry Swedroe. I hope you come back and tell us more about alternative investments. We've got to go to a commercial break. When we come back, we're going to talk about Sprint Nextel.